Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, January 3rd, 2019. Well, folks, markets are taking a hit today, down almost 2% on the S&P 500. You're looking at the SPY, which is obviously the tracking ETF for the S&P 500. Now, the key here is Apple warned yesterday after the bell. That's why the markets are in a little bit of a tizzy. But in all fairness, I would just like to point out we're down 2% on probably one of the nastiest warnings that we've seen in years. And it's on one of the biggest stocks in the world, the biggest companies in the world. In fact, not the biggest anymore, but it used to be over $1 trillion market cap. So, in my opinion, right now, anyways, we'll see where you are at the end of the day. But this isn't exactly the panic, freak out, collapse of the century by any stretch. In fact, if you zoom out on the Spider's intraday chart, you can see just a couple weeks ago we were actually lower. So what we're seeing here is a retrace of this initial low pivot all the way to this high pivot. In fact, interestingly enough, today's low right here was a 382 Fibonacci retrace from that low to that high. So we actually hit a Fibonacci level. We bounced. Now we're starting to come back in a little bit. Now I want to talk about the key things that I'm watching. So going into the end of the day, everyone always asks me, well, where do we have to close and what does it mean? Where do we have to close for the markets to be bullish? Where do we have to close for the markets to be bearish, etc.? So I'm going to give you that information right now. Then we'll talk a little bit about more on Apple. I think Apple hit a major, major level today. In fact, it's a two-factor level that's worth taking note of. So we'll talk about that in just a minute. All right, so first off, you can see the pivot low from yesterday right here, and that really marked the consolidation here before the markets kind of rallied towards the end of the day. And this was all bullish consolidation inside of this move. So this low here from yesterday, if somehow we close above the low from yesterday, which is this line right here, that would be very bullish price action. Again, you could look at it and say that's a very minor sell-off on the markets considering what Apple just said. Remember, Apple, what they said should reverberate through every stock out there. I mean, if Apple's having trouble, every other stock that has international sales, especially in China, is going to have trouble. If the markets are only giving you a 2% sell-off or less, then honestly, that's not that bad. Today could have been a 5% down move in the markets very easily. Very easily. And so far it isn't, although you never know where we could go in the final 2 hours, which is 2 hours left in the trading day as of now. So that's your first level. So watch 246 on the Spiders. A close above that by the end of the day is bullish. Now, if we close below that line, I'd like to see this trend line hold here, or the 318, which is the low of the day. So right in this range. So above, so right where if we closed right here, for instance, we would be above the 382 and above this line. That would be more of a neutral close for me. It wouldn't be insanely bearish like many would think based on the warning from Apple, but it wouldn't be bullish either. It would kind of be more neutral. Now, if we close below this area, that would be slightly bearish. And then if we somehow sold off and took out this pivot low here, that would be very bearish. And I would say we're going back to the lows here, maybe even lower. So that's a little bit of an indicator about what to look for into the end of the day. I'm really mainly watching the 246 level and then this level here. Again, in this range is neutral, above is bullish. Anything below is not the strongest of closes for this market. Okay, so that's that. Next, I wanted to quickly go over to the Apple chart on the daily. Here's the Spiders chart on the daily, but I want to go to the Apple chart here. The Apple's very interesting because you can see we have a big sell-off here today, but if you go to your weekly, this is what I took note of. I actually just wrote an article on it. So here's your low pivot going back to 2016 before the mega run up, which was just an epic run. The stock basically going up 150% from this low to the recent all-time highs. But look at what you did. So today on the weekly, you hit the 200 moving average. So that's a major level hit on the weekly chart. And look at right here, a 618 retrace of that entire move. So that's a Fibonacci retrace right there, a 618 retrace at around 144, which is kind of right where we are now. That to me is major. If it was just the 200 or just the Fibonacci level, that would just be one factor. But when you get both factors in there, what it tells me is that very likely you'll see Apple trade off of these levels to the upside in the coming weeks. All right. Now, one of the things that makes me also think that is the fact that Apple basically kitchen sinked it. So they took their estimates down, almost 10% from what the market expected for this coming quarter. And my guess is they overdid it. They knew the market was going to not like it anyways. They probably overdid it. So my guess is they're actually going to come in slightly better than what they warned on. So, for instance, they warned, I think they said about 83 million, something like that. My guess is it'll come in around 85 million. It won't be quite as bad. Okay, now a lot has to do with whether or not this tariff trade war can be resolved as well. So if you get any sort of resolution on that, everyone's going to assume the Chinese will start buying iPhones again. Because in all fairness, I know Tim Cook didn't say this was a huge factor, but honestly, I think that China's very national, and the nationalism, the belief in the state, the country. And my guess is that they're not big fans of Trump, obviously based on what Trump's doing via the trade war. And my guess is if they have to choose between an iPhone or some other phone that's made in their country, that's pretty much equally as good. Let's be honest. These days they're almost equally as good. They're probably going to go with the other phone right now. So I think that is a little bit of a boycott aspect is huge for this company. And if you can get the trade war over, then I think it should mitigate that somewhat and help quite a bit. So my guess is you have earnings that will come out a little bit better than what they just warned on, and then you'll also see the probably this type of thing is going to push Trump to do some sort of deal with China and get that passed. So, anyways, bottom line is, could Apple go down another couple dollars from here? Sure. I mean, that's just pennies at this stage, considering the move it's already had from this high. But a 618 Fibonacci retrace at this point is humongous. That's happened in basically a few months, which is amazing. And then the 200 weekly moving average, I got to believe you're going to bounce. Look at how perfectly it hit that level, too. Right to that low pivot, and then already bounced a little bit off of that low today. So that's what we have, guys. And again, I'm going to turn you over here and we're going to call it a day. I'm going to get back to trading this awesome market in the afternoon. If you're interested in day trading, we had another winning day trade in the chat room today. Great spider scalp. There's opportunities galore out there, so I encourage you to come join the intraday stock chat. Take the 7-day free trial if you're into day trading. If you're into swing trading, take the 7-day free trial to the research center. I just put out a new trade today there. It's already in the money. Literally, the market right now is amazing for day trading and swing trading. The volatility makes it great like this. When volatility was at like 10 on the VIX, it was honestly really slow. Markets just floated up. We remember that from 2017 and portions of 2018. This volatility gives you the building blocks for just whippy moves that if you read the charts right, you can just max. I mean, you can make like 10% here, then turn around and make another 10% over there, and back and forth and back and forth. It's really pretty amazing. So bottom line, come join in themoneystocks.com. I look forward to seeing you and making money with you. Take